Hello everyone, and welcome to the first edition of iTrust's newsletter in 2009. A very warm and happy new year to all of you. Today we're going to deal with an issue that's very topical right now as a result of the recent interest rate cuts that the Reserve Bank of India has introduced. A lot of people have been talking to us about whether home loan rates are going to come down or not, so let's talk about that. We'll spend another couple of minutes on this subject. I think before the end of January, another 3 weeks from now, most of the PSU banks and the private sector banks will reduce their home loan rates. That's going to be the immediate impact of the rate cut that the RBI announced just about a week, 10 days ago as a part of the second stimulus package that the government has introduced. By way of indication, what this does to home loans is any loan that's below 20 lakhs is going to be about 9.5% or so. A loan above 20 lakhs is going to settle at an interest rate of about 10.5% or so. There's going to be some catches associated with these low rates. First of all, I think a lot of the banks are going to expect that these loans last only for about a 5-year period, and almost every bank will have its own little criteria based on which they will offer these low rates to people. So if you are in the market for a home loan, do talk to your bank about what the catch in that particular loan is going to be. If you want to look at the kind of savings that you might be able to get as a result of these low rates, hypothetically speaking, if you were in the market for a rupees 30 lakh loan, and if the rates previously were about 12% and now they've come down to say 10.25% after this rate reduction will be introduced by all the different banks, the old EMI would have been approximately 33,000 rupees at 12%. The new EMI at about 10.25% will be about 29,500 rupees. So I think it's a substantial amount of money that you could save, about 3,500 rupees per month on your EMI. So it's definitely worth considering that. The next obvious question to ask is whether rates can go a lot lower, maybe in a couple of months, and should you wait to take a home loan, or is now the right time or not? We always think of timing the market as far as interest rates are concerned as being a very, very challenging and difficult thing to do. So if you need a home loan today and if you found a property, I think today might be the best time for you to actually go and get the approval on the home loan. What you might want to do is check with the buyer, check with the seller of the property if maybe they're willing to wait for a month or so that you don't lose the deal. But in any case, I think now is as good a time as ever to get a home loan. If you're in the market for a property in say 6 months' time, chances are interest rates will probably head further lower than what they already are. But like I said, nobody knows what the future might hold, so don't try and time the market. The final question worth asking is, does it help you if you already have a home loan? Will these low rates actually come to be of any kind of benefit to you? The unfortunate answer is no. The reduction in rates will only help those people who are applying for a fresh loan. If you have a pre-existing home loan, then I think what you might want to consider is refinancing your home loan. So let's talk a little bit about what refinancing means. Refinancing as a concept is very, very easy to understand. It's just a replacement of an existing loan obligation that you have to a lender with a new loan obligation with perhaps improved terms, such as a lower interest rate or increasing the tenure of the loan or changing some kind of your monthly the EMI payments and so on. It's typically done for home loan financing purposes, but it does come with a few catches as well. Your existing lender will know what your intentions are when he actually issues the loan to you. So he's going to try and make it a little bit difficult for you to leave that particular lender and go to another lender at a cheaper rate. So what you might want to do is check with your lender what the criteria are. Typically, I think you have to spend 12 months with your existing lender before you are allowed to switch to another lender. That lender might also charge you some kind of a penalty, which could be anywhere between 2% to 4% of your principal amount of the loan outstanding. Finally, if you are refinancing your loan with a new lender, the new lender might charge you a loan processing fee of about 5,000 rupees or order of magnitude 10,000–15,000 rupees depending upon the size of your loan. So you might lose some money just paying the penalty fee and the loan processing fee, but if you're actually saving a lot of money by refinancing your loan at a much lower interest rate, then it could be beneficial for you. So that's all about how lower interest rates might help you in the near and medium future as far as your home loan is concerned. Next week we'll revisit another topical issue. If you have anything that's on your mind that you'd like us to comment on, feel free to email us at contact@itrust.in. Let me repeat that, it's contact@itrust.in. We look forward to talking to you again next week with some new topics. Thanks, bye-bye.